Let's chat commodities now, where you have seen very sharp declines coming in for the industrial commodities, especially the base metal prices, where you have the copper prices trading at around 4-month lows in case of LME and 7-month lows on Shanghai there. Same is the case with zinc as well, nearly multi-month lows coming in for the LME prices, but Shanghai is trading at around 4-year lows when it comes to that commodity. So very sharp declines coming in for the base metals, nearly 2% down on LME copper even at this point in time. Same is the case with the crude prices as well, where you have seen more than 1% of a cut down coming in for the Brent and the WTI prices. The only thing that is in green has been the gold prices because of its safe haven buying coming in for Asia and now in Europe as well. How do you trade all of that then? Let's go ask Ram Pitre. He's Senior VP, Head Commodities and Currencies, and he joins us from Anand Rathi Commodities. Ram, hi, welcome. Let's start with the base metal space first and the kind of crackdown that you have seen coming in for that sector. Where do you see the prices going?
The base metal, especially the copper, if you see a long-term chart, it is showing some sort of a major weakness in on the LME. We have seen a high up almost 8,765, and it has fallen to almost 7,650 or so, and it has bounced back to almost again to around 8,000 level. But it is not sustaining those levels on the upside. I think looks like it is the pressure is mounting, and the major technical level of 7,650 on the LME has broken, and we are heading towards 7,450 and 7,250, that kind of level. On domestic market, we have seen it was a consolidation. We have seen between 420 and 430 for a long time, and it has the 417, the important key level on the downside, has broken, and it is trading below that level. So again, in copper and domestic market, I still can say that 417.90, 418.90, those kind of levels you can you can go short for a slightly bigger stop loss of 421.50, and our target is 414.50 to 410.20.
The other one in the sector really, Ram, is zinc, where we have seen very sharp declines coming in, continuing for 2013 now. What kind of levels do you foresee for that con?
In domestic market, if you see zinc again, we can say it has fallen from almost 110 level or so, and it is slowly and gradually it is coming down. For intraday, I am again saying 104 is a good level to go short. 104, 110 level. Stop loss is quite close, 104.60, but we may see 103 and 102.80 in coming days.
Ram, what's your sense coming in for the energy sector now? Because the declines there have been sharp as well. We are almost at a level where we could be turning negative for 2013 now. How do you see the prices?
Yeah, the rally, if you have seen, it has fizzled out at 98.50 on international market, and it has fallen to below 90 as a key important level, and it has broken on the downside, and it has bounced back to 93 and a half or so. So 94.30 on the upside is very crucial, and that held very well, and it has again coming back to close to around 92, 93 level. For intraday, 92 level is a very important level. It's break that the downside movement will accelerate. Coming back to domestic market, again the 5070, 5075, 5090 area, you can go short and with a stop loss of 5130, and our target will be 5010 to 4990 either today or tomorrow.
Ram, how is the precious metal looking to you? Do you think gold prices have a much uptick coming in from here? Do you see 30,000 breaching, or you think that's really still far away?
Gold began the week on the actually a bit note, and it has crossed on international market 1,600 level, psychological level, and it has gone up to 1,608. Looking at the moment, we feel like because of the dollar index, the way it is supported at 82 level, gold should have come down a little bit, but it is going along with the dollar. Dollar is also rising, and gold is also rising because of the safe haven. And in domestic market, I see because of the rupee appreciation slightly, the upside is definitely it is there, but it will be capped around 29,750, 800 level. But today, you can buy, if it comes down to 29,500, 550 level with a stop loss of 29,450 or so for a target price of 29,675, 29,750.
Harish Kalipelli, Head Commodities at JRG, joins in on the show this afternoon. Harish, first up, what's your trading call on gold for the day?
I think entire commodity basket is under pressure, especially after a sharp slide in euro, and except little bit of gains in gold. But I think gold is also likely to be under pressure. So we recommend to be on selling side in all the commodities, at least for today and tomorrow. And as far as levels are concerned, we're recommending to sell around 29,580 levels, keeping a stop loss about 29,660. And as far as targets are concerned, one can see around 29,350 levels.
Harish, what about your views on copper?
All the industrial metals, I think, are witnessing downside momentum, especially after fall in euro. I think copper is leading this decline, and we are recommending to sell copper for 412, 413 levels of target. And as far as stops are concerned, one can maintain stops above 421 levels.